Okay, so good evening to our traders out there. My name's Ross. I'm from Prop Firms Compared, and I'm joined tonight by my co-founder, Ryan Holdaway, but also a very special guest in as much as we have a man that needs very little introduction of us. We have Martin Najat, who is the CEO and one of the co-founders of one of the titans of the prop firm industry, and that is City Traders Imperium. So we are joined this evening by a guest that has seen a huge amount of evolution in the prop firm space with one of what is considered one of the biggest names in the industry. So Martin, would be really grateful if you could introduce yourself for some trader that's been living under a rock for almost the last decade and is unaware of your existence. If you could introduce yourself, that'd be great.
Sure. Well, thank you for the introduction, and pleasure to meet both of you. So basically, like I don't just own a company, but I've been like through all stages of finance. Like I started my career as an investment analyst, um, and then I jumped to trading. But obviously, as a new trader, like at a young age, like that wouldn't cut it basically to make a living, right? And then so I went to a trading floor, and that's where I met my business partner, Daniel Martin. So he was actually my mentor. And then basically we got along very well, but we also saw like a gap in the industry. So that's where we actually decided to create CTI. But when we created it, unlike like other prop firms, we actually created it as an education business first, okay? And then the prop trading basically came in, and then we added prop trading after that. So we always wanted to kind of offer both of them because that is basic keeps the company values like with the best interest with the trader on the same page, on the same line. And yeah, and here we are here, but after 8 years, almost 8 years.
And have you seen the traders that use you guys now that it's really clear that you guys are very education first. CTI Academy is really well attended. The traders these days need more or less from you? You seem like a more sophisticated trader these days, or do they need more education than they needed before, or less?
I mean, with the free education, there's a lot of education online, to be honest, and there is really, really good sources. But what we try to do is to offer like our flavor to it. So it's not like education to trading by itself, because that you can learn it like on Baby Pips and these kind of websites. But our education is more tailored to prop traders. So like aimed at beginners and then intermediates. I think professionals, they don't need education. They already have their own strategy. Again, so what we teach them is we teach them, like what is prop trading to understand the rules, but made it as an educational course. And this year, actually, we made it like available to everybody. Before it was kind of separate, but we thought, well, traders want more education because a lot of traders are kind of misinformed. Maybe they didn't fully understand some rules or certain things. So we said, why don't we give them access as soon as like they buy a challenge, they also get access to all our educational material. And yeah, I mean, since we launched this, we kind of merged them together. That I mean, we saw a good effect on like with traders. I mean, with their education, we had a really good positive feedback from the courses.
That's amazing, because I was going to ask the people. I mean, obviously it's a fantastic resource to have, but knowing what we do about the type of audience who like to trade, because this is the thing with prop firms, they are fantastic at giving people access to opportunity, but there could be an argument to say that the access is a bit too easy, and people use them as a way to learn whilst trading rather than learn first and then utilize a prop firm. So do you find that people actually utilize the education properly?
We did try that, before. In fact, this was one of the main things my business partner wanted to have it structured that way. So first education and then funding. But we can't like force people to learn the way we want them. Like, for example, psychology, we know is very important in trading, right? Yet a lot of people don't care about that, even though they know it. They only want to learn it when they feel the pain, enough pain to learn something, right? So that's why like before it was education and then the challenge itself as kind of like a prize but then later down the line, I mean, this year we just mix them together because we thought, I mean, give them the trail the way they want to learn at their own pace, because it's very difficult to know exactly at what stage they are in, like for each individual trader.
Yeah.
But for these kind of traders, we do like the one-to-one coaching for our traders. So if they want to learn or if they want help, so it's not necessarily teaching them a strategy or anything. It could be just piece of advice, you know. So that's why like they always have access to us, especially my business partner. He's the one responsible for education. I'm more focused on the prop trading business and the tech side. Yeah.
And I think that's worth kind of touching on there, because what you've just said, like, and it's easy to kind of gloss over that. You guys offer one-to-one mentoring for traders to improve their trading. I think some people will just kind of skim past that, but actually that's huge in itself in terms of service and a provision for your audience. That's massive.
Indeed, indeed. A lot of traders actually need it, even when if they don't know it.
Yeah.
Like I can give an example. It's still very painful to me to remember it. We had one trader. He was up like 20K or something on the account, and then in one day, like he just blew it up, like all of it. Okay, and that was like on the instant funding, not on the challenge. So instant funding didn't have any daily drawdown or anything, so you just lose the whole drawdown. And then we spoke to him, obviously, but I mean, it's a difficult situation. It's all about psychology, you see. So there is a need for it, and the bigger the account, the more you need it, usually.
Yeah.
Okay.
Is that what you find? The bigger the account, the more they need it. That's interesting.
Yeah, because psychology, like, I mean, you can lose 100 pounds, but if you lose 500, 1,000, and then you have this pressure of social media, like all these influencers trying to push like high profit very quick, it all like plays with your psychology. So unless like you're aware of these things in your trading, while you're trading, like you can really easily lose the account and just like fall for that trap, basically, comparing yourself to others.
It's a really interesting one with the influencer side of things, because in terms of education, there's so much information out there, and there's so many people giving away free information, really good quality free information where you can learn everything you need in order to be able to trade effectively. But then you've also got those people who bounce people into courses and pay for things. It's a really difficult thing to marry up the benefit of having such quality free information with some people who are out there just to essentially scam people. It's really easy to sort of scam or fake, your charts and your payouts and all that sort of stuff.
Very easy, very easy.
So it makes it so difficult on one hand, it makes it really accessible for new traders to be able to go out there and learn. But on the other hand, it gives this false sense of ease. Like I always say, like trading's the hardest easy thing, or the easiest hard thing to do. You just pick, buy and sell, and you can make money effectively. But it's I think the influencer stuff is a blessing and a curse at the same time.
Yeah, that's true. That's true.
Sorry, carry on.
I mean, at the end of the day, it like everybody, like we all did the strategy hopping, right? Where we change strategies. But at the end of the day, it's like you can get, for example, you can become a doctor just in 1-2 years, right? Like even universities, like for example, I did my university in finance, but like I don't use many of the things I learned at university in business. I just had the kind of background on finance, and that's it, So like, I mean, people kind of, I mean, I'm not saying like they should. I mean, obviously, scammers, these like need to be stayed away from them. But at the end of the day, it's like the learning experience. You always like learn with something. Like for example, at CTI, like we when back in the days when we didn't know how to do risk management in the company, we lost real money, and that's kind of the price of learning, right? Sometimes the LP would do something, not intentionally, it's just how things work. But it's kind of my responsibility to filter out good from bad information. And usually, I mean, my motto in life is like, if you want to learn something from somebody, you need to see him doing it, and then you start listening to that person. But if it's just pictures and like noise, just stay away. Most likely, it's not a real thing.
And this is a thing with the path to profitability is I think that's probably from a trader's point of view, understanding and knowing as a binary option, whether you are or aren't profitable, whether your strategy is or isn't profitable is so difficult, because you need to do the same thing every single day or every single tradable session. You have to do the same thing to get statistically significant data. So you can say, statistically speaking, after, you know, if after, say, 10,000, if you can forecast after over 10,000 trades, you know that your profitability, taking into consideration your risk reward and all that sort of stuff, you will be profitable. But the problem is that it's a really difficult thing to do that same thing day in, day out, and get enough data to know clearly and specifically that, yes, I am profitable, because it takes time. And, you know, the audience is fairly impatient sometimes.
Yeah, exactly.
So,
yeah.
So it's and this is the thing as well. even if you back test and you do the same thing day in, day out, and you can prove that you're profitable, as soon as you switch to a live account or you get funded or something, you have to still have the mindset of doing that exact same thing to make sure you've got that edge that you statistically know is real. And that's the real difficulty. It's that time to, and I think that's why people strategy hop, which you just said, is because they try something for, you know, a few days, a week, maybe a month, but they haven't got enough reps in to know. And, you know, there's such a thing as variance as well. So, you know, your profit and loss could be going up and down like that. You could have a dip. You go, okay, it's not working, when in fact that's just the natural path of profitability. So it's a really difficult thing.
That's correct. And surprisingly, like, it's not just about the drawdown in P&L. It's also the drawdown in psychology, like your mental state. You know, like even like myself, when I trade, I always think about, okay, like, how am I feeling today? Am I in drawdown? You know, am I tired or not? You know, or could you could be good, and then suddenly something happened while you're trading that triggers you. So that's why, like, psychology is a massive thing. Most of the time, like you said, like the data, you could backtest 1,000 trades, but that doesn't mean the data is correct, because if you haven't followed your strategy like 100%, then any data that you like any trades you took without following the strategy is irrelevant data. You see? And the only way to get consistent is to also be consistent with the psychology side, like with your mental state, knowing yourself, what triggers you, what like bothers you, what makes you trade very well, and always like optimize not just your environment like during trading, but everything around you, like in life, you know, maybe go to the gym, eat healthy, this kind of thing, you know, because everything kind of benefits you at the end of the day as a trader.
And what kind of has worked for you throughout your trading career? Like, kind of thinking specifically about the psychology, is there anything that you have in your kind of, like, this is my routine? Do you know what I mean? This is my, you see, like, you almost have like an internal tick list of how am I feeling today? You know, what works, what's worked for you?
Yeah, I have a very specific routine, to be honest. Kind of similar to the gym. Okay.
Yeah.
I've been going to the gym like from a very young age, like on and off. But I use kind of the same philosophy. Like, you don't grow your muscles, you don't lose fat unless you go consistently the same time, you eat the same meals, you see. So I took that philosophy and applied it to trading. But even with that, like, sometimes it's, I mean, with trading with the added psychology part, right? So I use that philosophy. That's why, like, I trade the same time, like the same minute. Basically, I even have like the same minutes where I can take the trades within the hour, and outside of those minutes, like, I don't take trades, you know. And then obviously comes in the psychology part, what to do, like if this, then do that, you know. So I remove all the emotional part from trading, because I have predefined plan. I just follow like a robot, basically, you know. Yet still, like, you can never get rid of your emotions 100%. But I mean, you try always to optimize as much as possible to 100%. You know, there is always something to improve, definitely.
Absolutely, it's a weird one, because I even find when I'm back testing, let's say I'm back testing a one-to-one strategy, whatever the strategy is. If it gets some, you know, I find myself doing it. If it gets to, you know, 0.9 R, I'll go, oh, I'll take profit there. It was there or thereabouts. But even during my back testing, I still can't stick to the simple rules. It doesn't mean anything. I'm trying to do it to benefit myself, but I add just a little bit of nuance and go, oh, okay, I probably would have done that. And even from the get-go, just trying to support myself and trying to learn, it's a really weird thing.
It is difficult with trading. Like always, I mean, maybe initially I created CTI at the beginning. One thing for the like there was a gap and we wanted like to fill it, but also like being a trader, I felt like, okay, but you cannot be a trader unless you have like another source of income, right?
Mm,
So even like when I had a job, I was trading, and then basically like you need something to support you because psychologically you need that like your mental state needs to be free to take risk, right? Like if you're scared
Yeah.
from risk, then most likely you're just gonna lose and just go into a cycle. So yeah, I see a lot of people that just want to be full-time traders, but actually, like unless you're managing like millions for like a hedge fund or something like that, I mean, I don't think it's. I mean, life is boring, right? Like everybody, every one of us can add a lot more value into life, like in other areas outside trading. So take the money from here, then,
yep,
use it in good things outside trading. So I mean, that gives you more purpose in life, than just being a
Indeed.
full-time trader, in my opinion.
100%.
And you mentioned a second ago that CTI saw a gap. Is
Yeah.
that kind of essentially what shaped you to be that education first kind of model? Is that what you saw kind of back then before the kind of the birth of CTI?
Yeah, that was the start. Yes. So because like you don't get good education unless you have access to like certain connections, especially
Mm.
like in London. So it's very difficult. But my mentor, I mean, he worked with what's called I forgot the bank name. Oh yeah, Swiss Bank, as a consultant, and he basically was managing like trading floor in Switzerland. So he had like good understanding of like psychology and how trading should be. Like I didn't learn his strategy, but he kind of shaped how to be a trader basically. Okay, so we wanted to also take that and offer it to retail traders, so they have access to the same thing, and that's why like we offered the one-to-one coaching. But definitely like you said before, there's a lot of sources and there is also really good ones. So at the end of the day, it's like we do whatever we can to deliver the promise and the product that we want to deliver to traders. And then if we see them, like if we could like we changed like one life or one person to the better, I mean, we're happy, right? But at the end of the day, like not everybody who becomes a doctor is going to be successful. Not everybody who becomes an actor is going to be successful. So these things really depend on the person themselves. Okay. But yeah.
Yeah,
And
100%. And so something we've not really asked, because this is our fourth episode now, Ross, I believe, of Prop
mm,
Talk. Something we haven't really spoken about with some of the other sort of CEOs is what's been some of the challenges and difficulties? What's been your road? You say you've been live for, was it 8 years?
Yeah,
mm.
I can imagine it. I imagine it hasn't been a linear journey for you.
absolutely not.
No, of course. So what are some of the things that have happened that have been exciting where you've seen things grow and scale? What are some of the things that have happened in the background that maybe have made you go, oh no, this is a nightmare? Just tell us a bit about your journey. That would be quite interesting.
Yeah, sure. I mean, when we started CTI, it was the industry as a whole. There was like just four or five. Okay, there was like one futures company, and I think Top Step, and then the rest like three, four CFD companies. Okay, and we were one of them. But the industry as a whole was healthy. Okay, people used to approach trading more like trading. Okay, but over time that changed and people started gamifying and treat it more like a casino. And the
Mm.
way people think, what I noticed is that they don't trade profitable trading anymore, like my P&L is going up, 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 but the prop firm industry or the proper model was built around like, okay, we give you capital and then you try to keep it as much as possible and you grow it. And once you grow it, then we manage our risk accordingly so you don't lose much of the drawdown, right? But with the gamification and the casino style trading, people don't think like that. They think, okay, I'm paying $500 challenge and then how much money I can get out of it, going like full porting, full risk. And that creates like a really big challenge for all prop firms. And as we've seen, like a lot of them been struggling. But I mean, but the main ones are like if people just relied on B book, then that could be a problem, because like you can't A-book and you can't B-book those kind of traders, right? Like what do you do with them? Like you still want the best, but what do you do with them? But and then you have the other firms. I mean, you kind of mix. So you still A-book traders, the good ones, but you just take the risk and you manage that risk. And that is like so far, that's what I've seen like the best way so far. Okay. But we've also been working like behind the scenes on something new, where we kind of detach the company from the sales of the traders, the challenges. Okay. Because think about it, like if the market gets saturated enough, I mean, at some point that the bubble is gonna pop, right? So you need, like any good prop firm needs to diversify their income. So we do have the education, but that still like doesn't is like it's not like directly correlated to traders trading, right? So this system that we're working on, it will give us the opportunity to not just like the problem with A-booking traders, or going back to the point, so you just understand what I'm going to say next, is that you can A-book them, but you cannot do it at massive scale, because more or less like the people that makes money when they A-book, like it's not going to generate enough profit, like that 20% that is going to cover the others, right? That maybe you didn't A-book or you didn't send to the market. So the main problem is ethical this way, but it has problem with scalability. Okay? So that's why like we've been working a lot behind the scenes on how can we actually detach that correlation between sales and the traders, because in the ideal world, I mean, maybe we can offset 100% of the payouts, or maybe more. We can generate more money even, you know? I mean, based on the data, we do have the data that supports it, but then it just depends on how it gets executed on the LP. Definitely, like we gonna. I mean, I'll make an announcement about that in the future. Once we have that ready.
Yeah, looking forward to that, and I think that the industry's changed so much since your inception. Like you say, the attitude towards traders and how they trade. There's so many more firms. The barrier to entry to actually start a firm is so low, because you can, there's prop firms, set up companies where you can white label technology. And I think it really pays a testament to CTI that you're still here and you're adapting and you're able to compete with this influx of stuff into the marketplace. And you're absolutely right. You have to adapt, and you have to grow, and you have to sort of face these challenges head on. And it sounds like you're doing it. I'm really excited to see what you're going to be sort of launching.
Thank you. Yeah, I mean, the company, I mean, we went through difficulties in the past, okay? But one thing like which we did differently, we really kept a lot of cash on the side, like a reserve. Like I pay myself, like we as founder, we pay ourselves like very, very little compared to like a lot of like other CEOs, because I just believe like I don't need more than what I need to live. Anything else is better reinvested in the business. We can develop something new. We can give to the traders like better opportunities. And there was like a huge investment going into risk management. That is kind of the big thing that but cost a lot of money to trial and error. But definitely like having a lot of cash reserves in the company from like the very beginning, not spending it, just it helped us like, like when the MT5 issue happened, a lot of companies went down. We were affected ourselves, okay? But then we got the MT5 back. But during that period, if I wasn't like prepared, we weren't prepared to survive all that cycle without affecting the traders. I mean, we wouldn't have survived. You see, so
I'm almost disappointed, Martin. You're telling me there's no golden Lamborghini on the front driveway. I am devastated.
I like the Urus actually. The SUV. Yeah, but I cannot justify. Why would somebody need the car like that? I mean, obviously for social media is good, but I mean, real life, I mean.
Well, the Urus is a very practical car.
yeah, not very practical. I mean, in the middle, let's say, like in a sweet spot. It needs to be nice, but at the same, like not exaggerated.
But it's good. I mean, you're absolutely right. Any business needs to have the reserves to kind of weather the storm. And you guys, none of us know what is coming around the corner. So it sounds like good businessmanship, if that's a word.
It doesn't matter how much you plan ahead. There's always something you never expected. Like maybe in the future regulations come in, maybe you need extra cash for that, maybe tech providers, they charge you more, you know.
Yeah.
I was going to ask and I was going to ask about regulation specifically, because it's something that is there's been murmurs of regulation, and it makes sense that at some point there's going to be a form of regulation within the industry. But I suppose more broadly speaking, where do you think the industry is going to go over the next sort of, I don't know, year, 2 years, 3 years? How do you think it's going to change and adapt? Obviously, it's speculation,
I
but
don't
you might
think
have a
it's
bit
gonna
more.
be regulated per se, like brokers do at the moment, okay? But everything around like setting up the business as a prop firm is becoming more difficult. Like especially after my Forex fund went down. So that created a lot of like you know, everybody's scared now to offer anything to prop firms. So they want a lot of record behind you, like bank accounts, anything that can show that you have a solid business. So these are the things that became very difficult. So it's not just tech. So tech is easy to get, right? It's just if you have the cash. But it's not the tech, it's the trading platforms. They have stricter KYC, KYB. And then you have payment processors, there's that risk. And now like payment processors even charging much more than it used to be. Like before it used to be like 2.5, 3% when we first started. Now it can get to 7. It depends on like which
Really?
providers. Yeah, it
Well,
depends because you consider it as a high risk business still.
yeah, you've got to set off some of that risk.
Yeah, exactly. I mean, it happened a few times, even with the future industry, where people, like companies, close down, right? So they want to make sure that they are protected, because at the end of the day, if you fail as a business, the bank wants their money, right?
Yep.
And the payment processor actually gets stuck in the middle that has to pay the bank plus lost disputes with the clients, right? So that's why like payment processors are very, very strict now compared to before. So it's not like super easy as it used to be to create a prop firm. It takes much more time, but I mean, obviously it's easier than having a broker, than establishing a broker.
Yeah, to be honest, that's probably a good thing that the barrier to entry is getting stricter.
It is.
There's, I won't name names, but there was a prop firm that was, there was a very big influencer who was the face of it, and behind the scenes, it was just a bunch of 20-year-olds running the show, and it.
Yeah, I guess I know who you're referring to.
Yeah, you
Yeah.
probably do.
Yeah.
But yeah, it's I think if anything, that if there's more scrutiny during the setup and the getting all the bits in places and showing that you've got a proper business plan, you've got the financial backing, whatever it might be, that's probably just good for the industry anyway.
Yeah, the main problem, like a lot of new firms shut down because they came to the industry thinking it's 2018 or 2015, because the rules were a lot stricter. So yeah, the payouts, the pass rate was a lot lower. But now like you really need at least like 250K cash reserves. And then you need to have like also every month money coming in to cover monthly costs. I mean, you can't start the prop firm. I mean, if you want a good prop firm, okay, a solid one, you need to have like that kind of money. Otherwise, you can just like white label in the company. They run the show behind the scenes. But then here, the trader is at the end. The traders are the ones that are hurt because like the tech provider, they will do whatever they need to do to protect their business, right? And they are in the back end, so they're not like exposed to the trader, so they don't care. They just need to protect the business. Just the white label prop firm is the one that gets hurt, and the trader, obviously, who's the most basically who gets hurt.
So tell us a bit more about CTI. I suppose this is your opportunity to do a bit of a pitch and tell us why CTI and why CTI is different and why people should trade with such let's be honest, one of the founding firms within the industry that are still running. Why should people come and trade with CTI?
Yeah, I mean, the main thing, if I want to narrow it down to like just a few words, all our rules, basically, they are done with the trader in mind, because I'm a trader, my business partner is a trader, and some of our management team are traders as well. So we understand what the trader needs. And usually, like when we done feedback and surveys, our rules are usually easier because you don't have like very restrictive rules compared to others. But also like we're not like let's say marketers, okay? Like when we don't come from a marketing background, so maybe like we have a better product for the trader, but if you have a better marketer, maybe they can deliver the product to traders more often. So these are the things. So all our rules is with the trader in mind. For example, the instant funding, it's just 6% drawdown. There's no daily drawdown or nothing. I've seen like few other instant funding programs. I mean, online, they always have some cap or something like maybe like a time windows for the news where you can't open or close a trade during that time window. So this, I mean, you only know about them maybe after you buy. I mean, especially if somebody doesn't read. And unfortunately, a lot of the traders are international, so English is not their first language. So many times, like they genuinely miss these details, you know. So us, like coming from like a trading background and finance background, we just made it very simple to follow. So you just have that rule, okay? You hit target, you get paid with those rules, and that's it. Like it's super easy.
It's actually massive that you sort of said it in passing, but I think it's actually a really key thing, not having a sort of a max daily drawdown, and also having limitations on when you can and can't trade around news. Those seem like very simple things, and I haven't got the metrics or the stats to sort of say what the fail rates are based on those sort of rules specifically. But I would imagine a large percentage of people are failing because of those rules, which you don't have. And it comes down to sort of mental clarity and being able to trade confidently without having that thing in the back of your head going, is there something that I'm not thinking about? Because I think a lot of people, they don't deliberately. I mean, yes, a lot of people over leverage and over trade. And
they do these things.
But to have two things like that aren't there to, I wouldn't say trip people up. They know some firms have that as part of their risk profile. That's fine. But as a trader, you could get tripped up. And to not have those little things, I think is massive that CTI don't have those.
Yeah, because I mean, why would you take a trade? But maybe you have a trade running from yesterday, right? And then it hits take profit during that time window and during the news. Like, why would your profit be invalidated, right?
Yeah.
I mean, it makes sense if you're just opening the trade during the news and just trying to kind of full port it, you know, that I can understand it. It's even like, you cannot even A-book it with the LP because the LP has their own spreads and it's not possible. But I mean, genuine traders who are trading, I mean, leaving trade like swing traders, I mean, I don't think they should be penalized for such things, right?
And maybe it's a sign of, you know, CTI's longevity here, that, and there's been a few things that you've said and almost kind of like not reacted to, and me and Ryan have gone, actually, that's really, really important. Maybe you could almost become desensitized to how good CTI has become, that stuff like that just becomes day to day the norm for you guys. But other people either starting on their journey or just kind of like finding their feet in the trading world are like, actually, that's really important. Actually, that could really benefit me. So maybe it's just a sign that you've been around for a while now, that you've kind of perhaps forgotten how good you are.
Thank you. I mean, why would you complicate the rules, right? I mean, something new came after time is the equity drawdown, for example. You know, like at the end of the day, if you have like floating profit, it counts the balance plus floating profit, and then if it takes, let's say, end of day is 10 p.m. UK time, and then it goes to 11, and then that, let's say, plus 5K goes back to zero, even if you haven't closed the trade, that is a violation. Like, why would you do something like that? You know, I see a lot of that. That's why, like, yes, our prices may be a little more than a lot of other prop firms, but because we provide very simple rules, you know, we don't have all these like hidden things that, I mean, just use a stop loss, don't over leverage, okay, and respect the drawdown limit if you want to narrow them, and don't gamble on the account, right? Because gamble, I mean, for a B-book prop firm, you can gamble as you want. I mean, that's fine, right? You don't lose money. But if you want to A-book the trader, then it's not possible to let him gamble. Like, we need to protect our capital, but also provide the opportunity for the trader to continue trading long term and stay with us as much as they profitable.
And again, going back to sort of what Ross was saying about just saying things in passing that we're like, wow, and you sort of, because you live and breathe this day in, day out. I think it's a really important thing to say that, because obviously one of the first things people look at is price, and that's obvious.
Yeah.
But there's obviously a balance between, let's call it affordability, and on one hand you've got affordability and a really strict set of rules. On the other hand, you could pay a bit more and have a bit more flexibility, and that's the trade-off you need to make as a trader. And I know where I sit as a trader. I prefer to have the flexibility and to be able to have the comfort of knowing that I can trade in my way without thinking, am I being tripped up? So I think it's a really important thing that, price isn't everything. Far from it. In fact, to be honest, it's probably one of the last things that should be looked at. It probably makes more sense to have a smaller account than a cheaper account with stricter rules.
Yeah, I agree. But unfortunately, like a lot of listing websites, if not all of them, I mean, they put always the price kind of the first thing, and people don't like try to dig deeper. But when I look at these, like, yeah, it's very cheap, but look at the rules. It's actually like, well, what's the probability? It's like a trading, right? You take a setup, A plus setup, because there's high probability you're gonna make profit, right? You could lose as well, but it's more likely to make profit. And the same thing is like, if you go very cheap with the price, then it's highly likely you're not gonna pass, or you're gonna be screwed over. Something's gonna happen, right? And then instead of paying just one fee, which costs maybe like $10, $20 extra, you end up paying like 3-4 times. Because also, like, us traders, I mean, I'm guilty of that as well. Like sometimes revenge trade, you want to prove yourself right? So you buy again from the same company just because you want to prove you're right, you can make it back, even though the rules are not the best for you as a trader. You see?
It's a really, they always say, if you're buying, I don't know, a kettle, I don't know, I'm making things up. Buy good, buy once, because if you buy cheap, you
100%.
end up just buying that over and over again. And it's
100%.
I think it's really important. And what you said about comparison websites listing based on price, look, we do it. But to be honest, Ross, it's something we should probably think of, is having some way of saying, this is the specifics about the rules, and ease of past, that's probably the wrong phraseology, but having something within our listing that says, hey, this is the level of strictness against the rules, or something like that. So that's something we probably need to look at as well, because it's something we do.
But yeah, 100%. But it's very difficult. But I think now with the age of AI, I mean, just take screenshots, put them into Claude or ChatGPT, and it gives you exactly like all the details. But at the same, I mean, it needs to be done that way, not just looking at the price. Exactly.
100%.
But I understand also it's very difficult to present everything on the website, especially for listing websites. But I think that's kind of like opportunity that could improve over time. If everybody started like looking more into the details, not just the price. Maybe don't show the price at all, just show the rules first, and then you see the prices.
Brilliant.
It's actually fairer to the trader as well, because if as a comparison website owner, Ross and I, the thing that we need to always think about is, what information can we provide that's genuinely valuable? And if we can really hammer that point home, that look, don't buy cheap because you end up spending more. I don't know how that would look. I think that's really, really valuable. So it's certainly given us something to think about.
100%. Well, thank you. I'm glad I could add value.
Massively.
Yeah.
Cool. So is there anything else before we wrap up? Is there anything else you'd like to say? Maybe give a promo, or say anything to sort of incentivize people to come and try out CTI?
Yeah, I mean, I always encourage people first to look at what's best for them in terms of the rules, right? Then look at the prices, and then obviously all prop firms, they have some promos, right? At the moment, I mean, we ourselves running a promo for Eid al-Adha, because in Dubai there's Eid. But yeah, I mean, but again, like, don't always make the price the only thing to look at, right? And I'm very like excited for like in the future, because especially for this risk management, because it's been like the work of my life, to focus mainly on risk management. How can we detach the company's profit from all sales? and that way, because even when, like I said before, like even when you book traders, you still can lose money, right? But I always believe there is a way that we can offer the best to the trader, at the same time remove all that risk from us by using like special formulas, algorithms that protects our downside while we still can offer the upside for the trader.
Well, look, we're always more than happy to jump on a call, and with this new feature that you've got launched, maybe we can set up another Zoom, and we can have a specific session just about that, and you can.
We're putting it into test this month. I mean, it's been in testing for a lot of time, but we got to a point now where it's good to be like tested on live capital, basically. Okay.
Very cool.
But definitely, it needs some time also to be tested there to offer to make it scalable. But I'm very happy one day if like once we have tangible results that we can actually show. We're even thinking to do something like how much we have reserves on the websites, from this system, or how the system is operating, kind of for transparency, to show like, okay, like the traders are trading like this, making this amount of payouts, and we want to show how much money we have on the LP that can offset the traders' payouts using our systems and formulas. And I think that would be like a huge for the trader community.
Very cool. Yeah, I know.
Cool. That'd be amazing. Yeah, when you've got a bit more tangible information, let us know, reach out, and we can set up another one of these, and we can hone in on that, because I think it sounds like, again, you've been in the industry for so long, you know where the industry is going to go, and it sounds like you're one step ahead. So I'd love to sort of dig deep into that when you find out some of the details.
Thank you.
Cool. Well, thanks so much, Martin. Really appreciate your time, and best of luck with everything. Really appreciate it.
Thank you so much. Nice.
Thanks, Martin. Appreciate it.
Bye-bye. Take care.
Bye now.